What if you paid more in taxes last year than some billionaires? Not more percentage-wise, more in dollars. What if you, working full-time, budgeting groceries, filing W-2s, paid more to fund America than someone who owns a private jet, a super yacht, and an offshore shell company? And what if Congress knew all of this and refused to change it? Because here's the uncomfortable truth. The rich don't just avoid taxes. They use the tax code like a treasure map, one written by their lawyers and rubber stamped by lawmakers. They don't hide their wealth. They structure it. They rename income as investment. They borrow against assets. They pass fortunes through trusts that dodge the IRS like smoke through fingers. And it's all perfectly legal. In fact, it's not just legal, it's protected. Because every time there's a bill to close these loopholes, it dies quietly, behind closed doors, buried in complexity, killed by the very people who claim to represent you. This video is going to pull back that curtain. We'll show you how billionaires pay almost nothing while you foot the bill. Why the IRS is harder on single moms than on hedge fund managers. And how loopholes like buy, borrow, die keep trillions of dollars beyond the reach of the public. By the end of this video, one thing will be clear. The game isn't broken, it's rigged, and Congress is holding the cards. For most Americans, making money is straightforward. You work, you get paid, you pay taxes. That's the rhythm we've all been taught. It's how the system's supposed to work. And if you don't, the IRS is watching. But for the ultra-wealthy, it's different. They don't rely on salaries or hourly wages. They don't wait for Friday paychecks or worry about tax brackets because their wealth doesn't live in cash. It lives in assets, stocks, real estate, private companies, fine art, crypto, hedge funds. And as long as they don't sell those assets, they don't owe a cent. This is the foundation of billionaire wealth. You only pay taxes when you sell, so don't sell. Jeff Bezos can sit on billions in Amazon stock and never touch it. Elon Musk can become the world's richest man without triggering a single taxable event. Warren Buffett, famously, pays a lower tax rate than his secretary. Why? Because they don't live off income. They live off paper value, and paper value isn't taxed. But when they need cash, they don't sell, they borrow. They walk into a bank and say, I'll use my $5 billion in Tesla stock as collateral. Lend me $200 million. The bank says yes, no income reported, no capital gains realized, just a loan with interest that can often be deducted. It's called buy, borrow, die. Buy assets, borrow against them, tax-free. Then die and pass them on, often with a step-up in basis that erases the tax bill entirely. Meanwhile, the average person cashes their paycheck, pays income tax, payroll tax, Medicare, Social Security. Before they even see what's left, the rich grow richer while barely touching the tax system. You pay at the start, they pay never. And it's not accidental, it's by design. Because these aren't loopholes found by accident. They're written for people who understand how to use the tax code as a ladder, and every rung takes them further away from the obligations the rest of us carry. Here's the part that stings the most. Every single one of these loopholes is legal, not hidden, not accidental, legal by congressional design. The richest Americans don't have to break the law. They help write it. Lobbyists craft the language. Lawmakers insert it into bills. And when the public asks questions, it's too late. Buried in 1,200 pages of legal jargon no one reads. Take carried interest. It sounds harmless, technical even, but it's one of the most infamous loopholes on the books. It allows hedge fund managers to take what is clearly income, money they earn for managing other people's investments, and reclassify it as long-term capital gains. Why does that matter? Because income is taxed at up to 37%. Capital gains, 20%. Same money, same person, half the tax. And Congress has known about it for over a decade. They've promised to fix it again and again. But somehow it always survives. Now zoom out. There's the 1031 exchange, a rule that lets real estate investors defer taxes by rolling profits into the next property. Sell a $10 million building? No problem. Buy another one, and the tax disappears again and again for life. Or grantor retained annuity trusts, known in wealth management circles as GRATS. They sound obscure, but they're powerful. You stuff them with assets expected to explode in value. Any growth over a certain amount goes to your heirs, tax-free. Then there are foundation loopholes. Create a charity in your name. Donate appreciated stock, take the deduction, keep control over how the money is spent, and enjoy the PR boost while funding your own legacy. And if that's not enough, go global. Move profits to shell companies in Bermuda or the Cayman Islands. Register IP in Ireland. Use a double Irish with a Dutch sandwich. Yes, that's a real tax strategy to shift billions in profit offshore. And when public pressure gets too loud, Congress holds a hearing, waves a finger, and moves on. Because the truth is, they're not trying to close the loopholes, trying to look like they're trying. And while you're focused on your W-2, your tax refund, your April 15th filing deadline, they're rewriting the rules in real time. Rules you'll never benefit from, but you'll keep paying for. If the richest aren't paying their share, someone else is. And that someone is you. You with a salary job. You with no offshore accounts. You who gets taxed before you ever see your paycheck hit the bank. While billionaires shield wealth inside foundations and asset bubbles, you fund the fire department. You fund the schools. You fund the roads they fly over in private jets. The top 1% now hold more wealth than the entire middle class combined. But when it comes time to pay for public services, public health, or public anything, it's the middle class that picks up the tab. In 2021, the wealthiest Americans paid an average effective tax rate of just 23%. Many families earning a fraction of that, $60,000, $80,000, even $100,000 a year, paid more. And that's before we talk about sales tax, gas tax, property tax, payroll tax, all of which fall hardest on people living paycheck to paycheck. It's not just unfair, it's upside down. And here's where it gets darker. When revenue runs dry at the top, governments cut back on school funding, on health care, on infrastructure, on safety nets for the people who need them most. They say there's no money for clean water in Flint, no budget to fix collapsing bridges, no resources for disaster relief, for veteran care, for basic human services. Meanwhile, the ultra-wealthy stash trillions in tax shelters, then go on TV to talk about philanthropy. They'll fund an art museum wing, a university building with their name on it, a climate initiative that buys carbon credits, but not accountability. All while teachers buy school supplies with their own money, while single moms get audited over a $2,000 tax credit, while working-class Americans are told they just need to work harder and budget better. It's not a gap, it's a canyon, and it's been engineered to grow. Because when billionaires avoid taxes, they're not just keeping more for themselves, they're taking something from everyone else. From the future we're trying to build, from the stability we're trying to maintain, from the promise that everyone plays by the same rules. And if that promise collapses, so does the system built on it. You'd think with all this money floating just out of reach, the IRS would be swarming after it. Massive portfolios, shell corporations, $100 million trusts. But instead of chasing the biggest fish, the IRS audits the small fry. In fact, if you're a low-income worker who claims the Earned Income Tax Credit, you're 5 times more likely to be audited than someone making over $1 million a year. How does that make sense? It doesn't, unless you understand how stretched the system really is. Auditing a billionaire isn't easy. They have entire teams of lawyers, accountants, shell companies, and offshore structures. Each return is a maze, designed to exhaust anyone trying to follow the money. It can take years, years, millions of dollars, endless litigation. But auditing someone earning $30,000? That's simple. No lawyers, no complexity, just a few forms and a software script. So the IRS goes after those who can't fight back because they're cheaper, because they're easier, because they're vulnerable. And it's not even the IRS's fault. For decades, Congress has underfunded the agency. They've cut enforcement budgets, slashed staff, hollowed out its ability to go after the ultra-wealthy. Then they turn around and say, see, the IRS isn't doing its job, so they cut funding again. It's a perfect cycle. Defund, blame, repeat, and in that vacuum, tax avoidance becomes the norm, not the exception. For billionaires, the message is clear. You'll be fine. The IRS doesn't have the resources to catch you, and if they try, you'll outspend them in court. For everyday people, the message is different. Make a mistake, and we're coming. Miss a document? We're knocking. Need help? Good luck. This isn't just about fairness. It's about faith in the system. Because if tax enforcement only applies to the powerless and the powerful walk away untouched, how long before people stop believing in the system altogether? When called out, the ultra-wealthy and their defenders have a script. They say, we already pay capital gains taxes. We're job creators. We give back through philanthropy. And on the surface, that might sound reasonable. But here's the deception. It's not what they pay. It's what they avoid. It's not what they give. It's what they keep. Capital gains taxes? Sure. But only when they choose to sell. And thanks to loopholes like stepped-up basis, many of them never sell at all. Job creators? Yes, some do build companies, but employees still pay more percentage-wise than the executives cashing out stock options. And philanthropy? Let's break that down. When a billionaire donates appreciated stock to their own foundation, they get a massive tax deduction without losing control. That foundation can then invest in companies, fund pet projects, or even donate to institutions that benefit their own image, their own alma maters, their own legacy. That's not charity. That's branding. It's tax-advantaged influence. And here's the kicker. The rest of us still have to pay full price for public goods. We don't get to fund our kids' school with a tax-deductible donation to a foundation we run. We don't get our name on a library and a tax write-off at the same time, but the billionaires do. It's a system of private control over public consequence. They shape society through influence, not obligation. They fund what they care about and skip what they don't. No voting, no consensus, just capital directed at will. And when anyone suggests reform, they call it class warfare. They say taxing the rich will kill innovation or punish success. But let's be honest, paying your fair share isn't punishment, it's participation. And if the richest can opt out, while the rest of us are stuck carrying the load, we're not living in a democracy, we're living in a hierarchy where influence is inherited, where rules are flexible for some and rigid for everyone else. The deception isn't just in the numbers, it's in the story we've been told, that the rich got there alone, that the system is fair, that opportunity is equal. But if that were true, they wouldn't need all the loopholes. By now you might be wondering, can any of this actually be fixed? Because for decades, every time someone proposed a wealth tax, it got lobbied into silence. Every time a bill threatened to close a loophole, an amendment appeared. A carve-out slipped in, a donor made a call, and just like that, nothing changed. Even modest reforms, like ending the carried interest loophole, have failed over and over. And why? Because the people benefiting the most are the ones funding the campaigns. And when power is concentrated in wealth, policy becomes protection. So yes, the system is rigged, but here's the part they don't expect. People are waking up. A new generation is questioning why billionaires exist at all in a world with starving children. Why the IRS targets the poor while billionaires buy their third yacht. Why teachers crowdfund classroom supplies while CEOs deduct luxury jets as business expenses. We've seen cracks in the dam. Whistleblowers have leaked IRS data showing showing how little the ultra-rich pay. Global initiatives are calling for minimum corporate tax rates. Movements are demanding tax justice, not as revenge, but as repair. And the more people learn how deep the inequity goes, the harder it becomes to justify. Because this isn't about punishing success. It's about building a society that works for everyone. We're told that change is impossible, that the rich are too powerful, that the system is too complex. But all systems are built on belief. And when enough people stop believing, systems fall. This is where awareness becomes action, where policy becomes pressure, where silence turns into scrutiny. And maybe that starts with something as simple as this: knowing and refusing to unknow it. Because once you see how deep the game is rigged, you don't just play it differently, you start asking who wrote the rules and who they were meant to protect. If this opened your eyes even a little, you're not alone. Most people never get to see how the wealthiest play a different game with different rules and different consequences, because it's not just about money, it's about power. It's about who gets to shape the system and who gets left out of it. At EconoFocus, we pull back the curtain. We connect the dots between policy and your paycheck, between quiet loopholes and loud inequality, between what you're told and what's really happening. If you believe these stories need to be told, if you want to understand how the system really works and who it really works for, then join us. Subscribe, share, ask the questions they hope you won't. Because the game may be rigged, but the more we understand it, the harder it becomes to ignore, and the closer we get to something better.